Hey everyone, welcome back to Financial Friday. I'm your host, Cory Nunes from Cory Nunes Capital, where we're all about turning financial dreams into reality without letting Uncle Sam take too big of a slice. Today we're going to dive into some tax efficiency investment strategies, or as I like to call it, how to keep that tax man from crashing your wealth building party. Taxes are a part of life, but with smart planning, we can make sure they don't derail your financial goals. Think of taxes as like that sneaky little villain, right? Or that friend who shows up at your parties and events, right, and eats all your snacks. You can't just kick them out entirely, but you can make sure they don't ruin your night, or in this case, your investments. So let's discuss ways to minimize the impacts of taxes while growing your wealth. I got 5 steps I just want to talk about for you to consider. So the first step would be to think of your investment accounts as different size buckets. Now the first bucket we're going to talk about is the tax-free bucket. Now these, I believe, are the VIPs of any planning growth situation you have out there. These are your Roth accounts and some insurance products, right? You put your money in and it grows tax-free. And then when you properly move money out, you don't have to report it as income. Uncle Sam won't even get a whiff. The second bucket would be your tax deferred bucket, which are pretty good too. These accounts are like your 401ks, your 403bs, your IRAs, your SEPs, and some other ones that I can't remember off the top of my head. But you get the idea, right? Your money grows quietly until it's time to withdraw, which then Uncle Sam will get a piece of the withdrawal. The idea around these accounts, though, or these buckets as we're referring to them, is to not overflow it. And if you do, you might pay a lot more to your uncle than needed. So the right amount of money in that bucket is the correct amount of money. Now, let's talk about the last one, the taxable bucket, right? These are your regular brokerage accounts, such as stocks, bonds, mutual funds, and such. The ones that you receive a 1099 on at the end of every year. Now, these can be a huge drag if not properly managed. But if properly managed, they can do great things for you too. It's all about proper planning. So I like to help people figure out how much to have in each bucket that works best for their goals. Because just by simply putting your investments in the right place can make all the difference today and tomorrow. Now, the second step here, let's talk about life insurance. I know you're asking, what does life insurance have to do with growing money and taxes? Well, it's actually the dirty little secret in the industry that the wealthy have been using for a very long time. For example, let's talk about Index Universal Life Insurance, or IULs. This is like the Swiss Army knife of finance. It's got insurance, savings, and growth all rolled into one package. You put your money in, it grows with the market trends, but has a safety net if the market dips. No roller coaster rides here. Picture it more like a set of stairs, going up, of course. I don't know about you, but I hate to lose, and I really hate to lose money. Now, you can also access the cash value tax-free at any time without penalty in this account. It's a triple threat: protection, growth, flexibility. Think of it as an emergency fund on steroids. Or, don't think of it as life insurance, but more as life assurance. Then we got step 3 to consider. The annuities. I call them the money machine. They're like a retirement vending machine, right? You put your money in now and it gives you a steady income later. It's your retirement paycheck. So you know that every month, no matter what is going on in the stock market, you have money that's going to show up in your account so you can pay your bills. Now there's 2 types of these that I really like the most, which are fixed annuities, which are super stable, predictable, and really have no surprises in them. Then you have the index annuities, which are great also, but they're a little spicier and have a growth potential by being tied to the market. But they both grow tax deferred, so the tax man doesn't even get involved until you withdraw. I call that retirement done right when planned right. Now, step 4 is alternative investments, because sometimes the best way to win the game is to play the game differently. For example, land banking. Buy land in the path of growth in an area that's booming, right? And watch the value rise and then sell it to the developer. We've all seen those areas where it was just bare ground at one time, then all of a sudden, boom, it's developed. I don't know about you, but I always think to myself, man, I wish I owned that land. And then there's private real estate deals. Invest in a piece of real estate, but without dealing with the tenants, toilets, or the trash. It works well for a hands-off approach. Now there's private equity also. This one's for the big thinkers. Private equity involves investing directly into private companies, often at an early and growth stages in the company. It can be riskier, but offers the potential for significant returns. And I love to help people navigate private equity opportunities carefully, ensuring that they align with their goals and meet their needs. Now, there's also the tax-exempt bonds, right? The income is tax-free from those. It's like getting a pat on the back from the tax man himself. Now, all of these options keep your portfolio diverse and exciting, but they're not for everybody. But if it fits, it can really change the game. Now, the 5th step I'd like you to consider is the asset location. Kind of the secret sauce here. So when we're talking about asset location, it's like packing smart for a trip, right? So for example, your high growth investments, pack those into the tax-free accounts. The low growth investments, pack those into taxable accounts. This strategy will heavily reduce the tax drag on your portfolio, letting your money grow faster and more efficiently. At Cory Nunes Capital, we specialize in these 5 tips. Strategies like these can help you make the most of your money while staying protected. Now, we all know taxes might be unavoidable, but they don't have to steal the spotlight from your financial goals. Here at Cory Nunes Capital, we use tools like the IULs, the annuities, alternative investments to help you grow your wealth while keeping taxes in check. It's all about working smarter and not harder, making sure you keep more of what's yours. Thanks for tuning into Financial Friday. If you learned something or just had a good laugh at my bad jokes, hit the like button, subscribe, and share this video with a friend. And don't forget, at Cory Nunes Capital, we're here to help you every step of the way. Got questions? Drop them in the comments or reach out directly. And I'll see you next week for another episode of Financial Friday. Until then, keep dreaming big and building smarter.